Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, welcome to the Massive Passive Cash Flow podcast. I'm Gary Wilson, I'm your host. Welcome back to this week's episode. We got a great guest today. Drew White is on. I'll introduce Drew in just a moment. But in the meantime, if you could do everybody a favor, if you haven't yet subscribed, please go ahead and do so to the podcast. It's on 30 different channels now, and you'll probably be familiar with Stitcher and iTunes and iHeartRadio, the biggest ones. Also, if you have not been to the website, realestatewithgarywilson.com, go there and click on members area. You go into the members area. If you're a member, you know what to do. You go to the left and log in and get all your stuff. If you're not a member, go to the right, and guess what? Log in and get all your stuff. so they give you, the people that operate this for us give you 30 days to go in there and explore. And there's like books you can download, 300 recordings on 1031 exchange, using trust in real estate investing, everything you could possibly imagine. And the best thing of all is get access to the community site where what we call investor agents are out there with profiles. You can check them out. You can look at their profile, call them up, email them. They're in 25 states. I know many of them because I trained them. And that's the only place they can be certified. And get this, they're not just using the MLS or LoopNet or CoStar or Crexi. They actually have access to every single parcel in the entire country, bar none. They know how to identify the properties, the owners, they know how to analyze them, they know how to negotiate them on your behalf, on or off market. So one of the most critical members of your team you could possibly have, and we've got the problem solved across the country. So have at it and treat it like it's Christmas time and get all the goodies you can get. So let's get back to the today's podcast. So we have Drew White. Drew, first off, welcome aboard, man. I appreciate you taking your valuable time to do this.
Yeah, thank you so much for having me. I might need to contact your investor agents after the show, by the way, but sounds awesome.
Every day we highlight them on our Facebook pages, and now it's like every day there's somebody to highlight. So it's they're really excited, they're happy, they're making money, investors are making money. So yeah.
That seems awesome.
Yeah. Hey, Drew, if you wouldn't mind, I know you're from Nebraska, and I love the state. I've been up there a number of times. If you could go ahead and give us a painted picture of Drew White and who you are, and then we'll jump into some meat and potatoes, because I think it will help people have some context when we get into the subject matter today.
Sure. Yeah. So like you said, born and raised, Omaha, Nebraska, go Big Red. Though we're terrible these days. But yeah, I was actually a nurse by trade. So I'll make it brief for you, but my financial journey basically started when I graduated. I graduated with $150,000 in student loan debt, and sat down and was like, wait a second, I'm gonna be making $35,000, $40,000 a year, and I got to pay this off. This doesn't make sense to me. And then everybody's telling you got to go buy a home now. You got to go do this, and not home for real estate, buy a home to live in the rest of your life, And so for me, I originally was a Dave Ramsey guy, and I'm not quite as a big of a fan you might find during the interview anymore. But that really set me down my financial path of kind of questioning and why did I, I was kind of upset. Why did I do this to myself? Now I look back, I'm grateful for the lesson. And then that led me to pretty much, where I did some real estate, flipped some mobile homes actually, and hold a few notes still today on those. And then found my way to infinite banking, which I'm sure we'll talk a little bit about today, also known as becoming your own banker. And so then I started using, working with people in real estate using that as well, and just kind of found there's some different ways or in different places to put your money that maybe aren't as well known to the general public, and maybe not as, I would say, advertised as well. And so just this past about 2 months ago, I actually let my nursing license expire to go all in on the infinite banking and real estate world, and just really passionate about both. So thanks again for having me on the show. I'm excited.
Yeah, I appreciate it. I mean, I know you're a busy guy, and I know we're lucky to have you on here. So it's a great benefit to have you. And I love the subject matter because it's been a very hot topic, particularly in the last year or two. And what makes it most interesting for me is, I come my 5 brothers and sisters. 3 of us are nurses, and one of my best friends, of course, is an oncology nurse. So as soon as I saw your bio, I thought I've got to have this guy on the podcast. So I'm glad it worked out. I know you're authentic, genuine guy, and this is going to be a big help to people. So let's go ahead and dive right in. Let's talk about what does that mean to become your own banker? How it works and why it's the best place for investors to store their wealth. And keep taxes down and put money set aside for repairs. Like so give us a little bit of what that actually is, what it means to become your own banker.
Yeah. So, we basically help you set up your own private personal banking system, where you receive, the benefits that maybe the bank was receiving when you were putting your money there. A lot of people, I find, they're surprised to find out, when you store your money at the bank, when you put a deposit down at the bank, and why the bank advertises that so heavily is they're going to go and put your money in motion right away and make more money with it. They're going to go loan it out 7 to 10 times. And they're using leverage, which anybody in real estate loves leverage, right? Mm-hmm. And so that's really, a lot of what it comes down to. The basic ideology of it is, doing what the banks are doing, but with your own private banking system. And so, and it grow. And like you said, there's myriads of benefits that we can get into. You're going to get, tax-free growth, typically around, 4% guaranteed. And it's not like the stock market where, you're up 10%, then you're down 10%, and none of that's locked in. You get that year after year. You get uninterrupted compounding. And then you put that, but, that's just where you're storing the money. But you're going to still put that money to use in your real estate, and buying businesses. And there's really just various ways people use it. There's no one correct way, but there's really, tons of benefits. Like you said, we can get more and more into them if you'd like, but that's the broad overview of really just what we kind of coach and believe is really to use this system to continue creating more wealth for yourself and buying cash flowing assets. So it's not really like an investment. It's just a better place or better vehicle to store your wealth and your money for these things. Yeah.
Well, I'll tell you what, there's 2 things I want to talk about next. One of them is I was a banker for years, and you would think I'd understand money, having worked at a bank for 18 years. And I really didn't fully understand money till I started going to the corporate library. This is how much fun I was. On my lunch break, I wouldn't go out to lunch. I'd take a brown bag lunch up to the corporate library, and I would read and study. I mean, for years. And what I found out was really startling. People think, banks are your best friend. You go there and you put money in, you can borrow money out, and they help everybody buy houses and cars and stuff like that. And that's all true. But the reality is there's a lot more to it than meets the eye. And without going into a lot of details, generally speaking, when banks loan money out, they're actually borrowing money to loan out. Okay, people don't realize this. They'll take deposits, like you said, and they'll loan that out, and then they'll sell the mortgages on Wall Street, recoup the capital, and then loan it out again. And each time to do that, they keep a certain amount of money set aside in loan loss reserves and capital reserves and things like that. But essentially, they can loan that up to 10 times, right? So it's really they're only loaning other people's money. The big difference with being your own banker with whole life insurance policies and IULs with cash values is you're not borrowing borrowed money. You're borrowing against yourself. You become the bank, and it's cash. And cash is way different than borrowed money. Now, we'll talk about that more in a minute, but what I want to do is for the sake of everybody listening, we're going to use current events as our best friend right now. So since January 20th, when the new administration took over, everybody now knows that there's an agenda they have to raise capital gains from 15 to 39%. That's one of the agenda items that this particular party has to push through. That means if you're an investor and you sell $1 million property and you've depreciated it, so you've got to pay capital gains on that. Today, you'd pay $150,000 on it. But if you wait to sell your property, you might have to pay $390,000 on that same $1 million sale. And if you think, well, I'll do a 1031 exchange, well, guess what? They're talking about eliminating 1031 exchange above $500,000, right? That's a lot of properties. In fact, that's more than half the properties. So what I want to do, if you wouldn't mind, Drew, let's talk about the benefit of using whole life insurance policies and IULs for the purpose of maximizing your tax position, and what this means to us and all the investors.
Yeah. And I'll just, clarify, there are people who do IULs. I personally only just will do the whole life. Nelson Nash was the creator of infinite banking. And so I would say I'm a Nelson Nash purist. And so nothing against people that do it, but I'm going to, that's how I would design it, is with a overfunded whole life insurance policy.
Yeah.
But yeah, the tax benefits. So, first we can talk about that, any growth going on in that policy, which, we set up, is all tax-free guaranteed growth. You're not going to get taxed on any of that growth. It's uninterrupted compounding. And then there's ways to structure it where, and I'm not a CPA, so make sure you consult a CPA, but there's ways where, like you mentioned, you're going to take a lien on that whole life policy. That's your policy that you've been paying the premiums to. And when you do that, most of the people that you're going to be working with in real estate probably have an LLC or some kind of legal entity. So you can set up a loan, to yourself, obviously. And the CPAs I work with, if this is what they tell me, if other people's CPAs don't say this, they might need to find a new one. But you can deduct that interest when you make payments back to yourself. You can do things. There's really creative ways to do things like, what does the bank do after about 5 or 7 years? They come back to you and they're like, Gary, we want to refinance, right? And so those are strategies, again, that you can copy what the banks are doing. You can, refinance with yourself, and you can, continue deducting that interest. And so you get to set the structure, I would say, of your loan. Nobody's coming and telling you, hey, here's what your payment is, XYZ. Now we say, play honest banker with yourself, set that up, like you're really doing a loan payment. Right. And so that's one of the ways, it is also, there's the ways that, because it is life insurance, there's, the payout is going to be tax-free to your family. There's also things people can do where they can, buy policies or banking systems for their kids and things like that. And it's a way to also transfer some generational wealth without there being taxes on that. The other thing I would throw out there, you mentioned about banks, that there's a guy in our group named Bob that I think it's funny. He always says, if you walked into a bank and you said, I want you to tell me what you're doing with your money, and I want to copy what you're doing. They would laugh at you. And also, like you said, you were a banker. Most of the bankers wouldn't even know what the bank's doing with their money, but the banks are doing this exact thing. They're doing what's called BOLI, bank-owned life insurance, and they're maxing it out as much as they can. And so even banks are using this vehicle, and they don't share it much with the public, but if you look it up, they're maxing it out and they're keeping that money, in motion, like we talk about. So, if there's other things, the tax wise you wanted to hit on, but that's some of the strategies and techniques you can use with becoming your own banker.
Yeah. It's funny you mentioned that, because going back years, I retired in 2003. And one of the things that came, but I didn't retire because of this, but one of the things that came up was someone found out that the banks, like when you're an employee, you get benefits, you get just medical insurance, vacation, things like that. And you also you can get life insurance too. What you got as employee was the death benefit part of that. But you're right. The bank actually got the investment part of it. They grew the money, they got it, and it was in your name. And actually, it was a big. I'm not going to mention the bank because people know who they are, but it was a big deal. It was a public thing, and it's sort of like a chain reaction. And in any case, I'm not against necessarily big banks, although I will, just as a side note, for those of you listening, if you are going to borrow money from a bank, I highly encourage you to go to a community bank, small local community bank. Don't go to the big bank. Yeah. Better yet, listen to Drew. Get yourself a whole life policy, maximize the investment part of that, and you become independent. You're your own bank. So let's talk about that a little bit. So when I was younger, when I first got my first whole life insurance policy, this was back in the late 80s. And back then, it didn't have all the bells and whistles that it has today. Just amazing the different benefits you can get. And back then, I don't think there was, it was very strict as far as the cash value, the rate you earn. It wasn't a lot of bells and whistles. But if you wouldn't mind, Drew, dive a little bit deeper on today's whole life insurance policy. And let's say somebody inherited, $300,000. And I know there's a big formulas you got to go through, but fundamentally speaking, talk about what that person can do as far as buying a whole life insurance policy, what they can put in, what they can contribute to add on to the cash value, things like that. Because I think that's really going to help a lot of people here, particularly like dentists that own their own practices, So.
Yeah. And so one of the first things that, we would do is, just basically have a phone call with the person and, make sure we're clear on what their goals are. We're big on making sure that we're a good fit. So it's, I'm not going to just say, hey, this is perfect for you. There are variables in there, like you mentioned, that there's a health variable, because even though we're using it for banking, we still got to show a need for insurance and things like that. And so, so sometimes we're not for everyone, but we would sit down with that person and say, okay, here's your goals. What are you looking to do? Are you, wanting to buy a business, do real estate? How quickly do you want to get this money into this, into this policy? Because that will determine it too. And then we got to look at, long-term as well. And so, we can do kind of a little bit of a hypothetical, but basically what we really traditional design is, we're going to basically overfund it up front. And we can get into the kind of nitty gritty stuff, but basically you need to be working with someone that can specifically design it. I tell people, if you have just a traditional whole life guy who doesn't know anything about infinite banking, probably what he's going to set you up with and sell you is a piece of junk. And because you're not going to get cash value right away. And so, like you said, a lot of the laws have changed. So it used to be you could put in $1 and then you could immediately take out $1. Well, there was a switch, about the late 80s, I believe. I might be wrong on the date, but government kind of started pushing more 401ks. And I got in trouble yesterday on LinkedIn for ripping on 401ks, but so I won't go down that path. Yeah. But it used to be you could put $1 in, you could get $1. So now what we got to do is basically design it where we can overfund this up front for you. And so, there is, and I always tell people there is a downside. But if you're in real estate, usually you can overcome it because you're already a long-term thinker. So the main downside is that first year, we can only get you about 60 to 65% of that cash value, depending on each person's situation, that you can, then take a lien on and loan. After that, though, we're going to continue overfunding it to keep building that cash value back up to basically kind of overcome that first year cash drag, which we call like the cost of starting your business. I don't know about you, Gary, but most businesses like the first year aren't 100% profitable. So that's kind of how we mention that, it's like, well, you're not totally profitable year one. And so we would have you overfund it. We could break that up however you want. If you want it all in the first year, if you want it all over 2 or 3, but really the goal is to build up that cash value quickly. And then, you can start, then we also preach like, use it right away. I have a client, he is a flipper. And so he started a policy and opened it up. And then like a week later, he was already using it to go flip. So our thing is like, don't let that money sit stagnant there. Go use it, go grow your wealth outside there right away. So does that kind of help answer some of the questions on that?
Absolutely. Yeah. And so really what I want to do now is start to make the connection, like why does real estate investing and being an infinite banker makes so much sense. And because we're seeing it more, and we're actually promoting it on our team. In fact, I'll have you, if you're interested, I teach a Monday night class. We call it Monday Night Live. We once a month we have a guest speaker, so I think I'll have you on there if you don't mind, Drew, because a lot of the investor agents I've mentioned before, and they're serving all these investors. This is like it's growing. I mean, just in the last couple of years, it seems like it's really growing. But so if you wouldn't mind, start to kind of make the connection there between the whole life insurance cash value and the real estate as far as how to deploy those funds and make more money,
Yeah. I would say that it comes down a lot to also about how real estate investors think. They already think differently. They're not like most of society, just kind of content with the 9-to-5 gig for till they're 59 and a half. The other thing is the way real estate investors look at money. So most real estate investors say, I want control of my money now, right? They want to have, and then they want to have liquidity. And so this is really a way that they can have control over their own system. It's not, and also, it's not, none of the money in there can be reported to the IRS as any kind of income or anything like that on a statement. And then it's very liquid. So when we talk about taking a lien on it, if you have a deal come up, you can have it. We say 1 to 3 days. I had one personally, I took a policy loan and I got it by the evening. I asked in the morning. And so, it can be very quick. And I've mentioned this a few times, there's a myriad of strategies. I met a guy actually at a workshop this past weekend where he's using it for, I don't want to go too deep into it, but basically like escrow. So he's setting money aside for insurance and taxes. So he actually uses it there, and it's just growing tax-free guaranteed. Now he takes it a step further and he loans it out to flippers as well at like an 18% rate. So he does not believe in money staying stagnant. So he even loans it out to do that, but while he's doing that, his policies continue to get that tax-free growth because your money stays put. So there's lots of strategies like that. We have people who will, set aside, like 100,000, their taxes, just store it there every year. And then, you keep paying your bill and you don't, and I didn't really get into this, but you don't have to pay that loan back. It's an interest only loan. Mm-hmm. So at the end of the year, you owe 5% simple interest on it. So what that can do for people, if we want, I'll get into that tax strategy real quick here. But if you put in, 100,000, and you just keep paying your tax bill, but you don't really pay that back. Well, what happens when, Gary, you sell maybe a $500,000 property, mm-hmm. And you've been putting 100,000 in, you now have a place for that windfall. So there's just, I haven't even probably scratched the surface, but there's just a lot of ways that it really, that works for real estate investors where they just get the control, the liquidity, the growth, and then it helps with and they're creative thinkers and creative financing deals, and it allows them to just have that instead. And also, when you go to the bank, you may have 300,000 in there, but they're still going to quiz you on, I need your dog's vaccination records. What are you using this money for? Well, with this, the insurance company doesn't ask you. It's your money in their mind. So they just say, where do you want it? How quick? So that's a lot, but that's a lot of the main reasons I think it works so well with real estate investors. Yeah.
I just love the whole business of it, because I know, like, when I borrow against cash value and whole life policy, that's just between me and the whole life company and myself actually. Right. And we can structure the terms any way we want because it's our money. And it's not like it's not regulated by 7 different government agencies as far as when you sneeze, how hard you can sneeze, and what tissue you paper when you sneeze, and it's true. Free market economy capitalism, which is what this country was as far as business goes, was intended anyways from the beginning. I'm going to stop there because I'll get on a political soapbox, but the fact is we really do have a lot of freedoms in this country, and one of them is the freedom to choose what we want to do with our money, and this is a great example of how we do that. Hey, if you don't mind, I want to kind of dig in a little bit on you personally in your own investing, because I know you've been in the mobile home business for investing for a while, but tell us a little bit about that, how you got started and what that looks like now, and what are you seeing in the mobile home park business, and maybe give an example of maybe funding a deal with whole life insurance, for example, if you have that,
Yeah. So full disclosure, I had found infinite banking kind of about the time I had stopped doing the mobile home notes. Though there was a strategy, I kind of had figured out like, I could keep using it this way. So I was not able to use it for my mobile home notes. But so I found my way to mobile homes because I still had a little bit of the Dave Ramsey in me, and the not wanting to take risk and things like that. And so for me, I just didn't have the right mindset about leverage quite yet. And so I thought, well, I know, smart, wealthy people are getting into real estate. What are they doing? And I was kind of overwhelmed by the just amount of options out there, single family, multifamily, commercial real estate, all that. And I read an article that just said, you should, look into each area of real estate a little bit before you make a decision. And I saw it said people, said mobile homes. And I chuckled. I was like, there is no way anybody's making any money off of mobile homes. I've seen those things, like no way. And so I found a mentor, and that honestly, more than anything with mobile homes was the biggest takeaway for me, was finding someone who knows what they're doing in a field that you want to learn in. And so, I paid him to show me the ropes, went out and had a deal like within a month. It was very quick. But I really just wanted to get my feet wet and get into real estate, kind of start figuring out and be around real estate people and start going to the meetups. And so yeah, a lot of what I did, if you want to get down to the details, is you can find mobile home deals, and then you basically provide financing. So, kind of along the theme of what, becoming your own banker, that's basically what I was doing. I hold notes still for a few mobile homes, and I'm just the bank. I'm not the landlord, so I don't have to worry about anything going wrong with the mobile homes. But there's really not many people providing notes on mobile homes. And so, yeah, so that was kind of my strategy. I was looking kind of to maybe start doing some mobile home parks, and still kind of having some discussions about a couple. But me personally, going back to the control thing, sometimes I have a hard time mentally partnering. And so I'm personally looking more like locally at some apartment deals where I could have 100% control and equity. But because I know a lot about mobile homes, I've definitely had quite a few conversations with some people doing parks, because a lot of times people doing parks don't know much about the homes quite yet. So, but I have, to answer your other question, it seems like from what the meetups I'm online and locally, mobile home parks are kind of starting to become a little bit of a hot commodity. I'm not sure if you've seen that or what your thoughts are on that.
Oh yeah. I've got investors, mostly in the US. On the global investor agent team that I run, I personally myself have investors from 13 different countries, and including US. And a lot of them have started looking in the last couple of years at mobile home parks to land, and just land in general. People are they're asking for, I just want the land. And I can see why. I mean, the population's growing at an exorbitant rate, and you factor in the increase in immigration. It's just a huge demand on housing, and the housing sector just can't keep up. That's why we're in the situation we're in right now. But so yeah, mobile home parks, in reality is I haven't done it myself, but I have a couple of people on the team who come from that background, and it's really the way to do it is to own the park itself and lease out the spaces, so you don't have to deal with the water tanks and the rain and the snow and all that stuff. So,
and there's, with the mobile home parks, there's no, cities aren't going to develop them anymore. So that's why they're also pretty, valuable, because they're not going to make much money off the taxes of those. And so that's another thing, is people are starting to realize the mobile home parks that are out there that's all there's going to be. So,
Well, generally speaking, everything we're talking about here when it comes to investing in real estate is all about it. You build wealth with it. It's an asset that increases the value over time, but really, current day, like usually the day you buy a property, it's throwing off cash. It's a cash flowing asset. So why is that? What's the importance of buying the cash flowing assets versus, other things, stocks, bonds, pork bellies, things like that,
Yeah. Well, my opinion is right now, I think the government's saying, I think we're at 5.4% inflation. I don't really believe that number. Yeah, I think we're closer to double digits. So, buying businesses, having real estate, to me, that's a huge hedge against inflation. And then if you go also where your money, like if your money's in a bank, you're getting maybe 0.25% on that money. Right. And then if you use it, you've interrupted any compounding compounding on 0.25%, whatever. Right. But so, you can hedge against inflation by buying businesses, by buying cash flowing assets, because what do? You increase your prices, right? As they inflate the dollar more. Then you also have your money, protected somewhere safe It's off for me. It's off government radar. I have control over it. It's also going to grow 4% tax-free guaranteed. So when you, to me, combine those together, it's pretty powerful, and that's why like the wealthiest people for, ages have been buying real estate and buying businesses, because even while the government continues deflating our dollars, you still have some control over this situation. You can say, I'm going to raise rents, I'm going to raise prices. So for me, that's huge. And then, also just, I don't know what everybody's goals are. For me, I want financial independence. I don't like, in our group, Create Tailwind, we don't like the word retirement because it means to be taken out of service. Yeah. So I want financial independence, and so creating, cash flow coming in, that gets me closer and closer to that passive income and that lifestyle that I want to live with my family and what I want to leave behind and teach my kids to do as well. So,
yeah, well, that's awesome. I really appreciate you sharing that. I know you've had quite a journey from, being an oncology nurse all the way to being a modern wealth consultant. And I appreciate you sharing your story with us. Is there any final thoughts, like maybe related to the journey from being a oncology nurse to modern wealth consultant? I mean, if you can think of one pivotal moment in time where you had the vision, or did it really just evolve? I mean, what can you tell us about that?
Yeah. So I don't think I'm not like I don't think I had one true pivoting moment, but I will say one of the biggest lessons I learned was to stop, looking at mistakes and failures in a negative light and seeing what could be learned from them. And so for me, I kicked myself for years about, what was an 18-year-old doing, getting himself in $150,000 student loan debt. But, for me, I've since reframed it. Like, I wouldn't be here talking to you, Gary, if I didn't do that, because it really lit a fire in me to be like, what is going on with me? What am I going to do financially for my family? And so, I now see those as like stepping stones to where I am now. And I don't love Ray Dalio's take on the economy, but he does have a book that I love, that he talks about that, like each challenge you go through in life, basically you get a gem, and it helps you with the next step and the next thing, and that you learn a lesson from it. You learn a lesson, and that's the gem. And so for me, it's like, I used to tell this as my sob story, the $150,000 and woe is me, and kind of feel all bad for myself and try to get other people to feel bad for me. But I think the main lesson is that, reframing that and realizing that actually those things could be really what set you on your journey, instead of, being the sad story. So that'd probably be my main thing.
Yeah. Well, I really appreciate you doing this. I know we probably went over a little bit, but for people listening, I mean, this has become such a hot subject, and I know people are going to find out more. So is there a website, consultation, free book, chapter book? What if people want to learn more from you, what's the best thing they can do?
Yeah, I have a website. It's called ibcdrew.com. On the top right-hand corner, if you want to schedule a call and we can talk, and, it's about 15 minutes, and we just talk about your goals and what you want to do. And if this is a right fit, if I'm a right fit for you, kind of, almost interview each other, but it's free. There's also on my website, my face is a little too big on the website, but next to my face, you can put in your name and email, and it'll just sign you up for like a 3-day email course. There's not a bunch of extra stuff at the end or no big ask. It's just literally 3 days to kind of show you a little bit more of the system. And then if, the way I work with people is I just educate. And so I don't really like push hard and keep coming after you, because it's, I'm not for everybody. So if people want to learn more, great. And if not, then no problem. I'm also big on LinkedIn as well. So, but I would start at the website, because you can find all that there. You can find LinkedIn and podcasts and everything. So,
okay.
ibcdrew.com is the website.
ibcdrew.com. So everybody, please remember that. If you're driving, don't write it down. But if you're sitting down, it's I, it's Indiana, B is in boy, Drew. IBC Drew. Forgot the C for Charlie in there.
He's a cat. Yeah.
And reach out, Drew White. Thanks again, Drew, for doing this. And for everybody listening, thank you for participating. Be sure to subscribe, leave a review. We appreciate that. Stitcher, iTunes, iHeartRadio, 27 other channels. And remember to get yourself one of those, it's called the Global Investor Agent Team, GIA. That's where you'll find certified investor agency. The only place you can get that. Okay, they're not necessarily residential, they're not necessarily commercial. It's its own category, and all they do is work with you and I, the investors. Okay, you definitely want to get one of those guys. So go ahead and do that. In the meantime, take care of yourselves. God bless you and your families, and we'll see you next week.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.